in the very immature, thinly traded asset like Bitcoin, it takes just a few guys with all the ammo in the world just to move it anywhere they want and to take out the most traders. So it's a lethal combination.
Hello there from Bedford. How are you all? Welcome to the era of the 6.25 BTC block reward. Bitcoin has had its third halving. Did you grab a beer and watch it? I joined Tone Vei's incredible live stream with thousands of others, so a big thanks to Tone for inviting me and putting on a very, very cool event. F2 Paul mined the last block of the 12.5 Bitcoin period, and they left a nice little message. New York Times, 9th of April 2020, with $2.3 trillion injection, Fed's plan far exceeds 2008 rescue, which was a very cool tip of the hat to Satoshi's message in the Genesis block. Anyway, welcome to the What Bitcoin Did podcast, which is brought to you by Kraken, the best place to buy, sell and trade Bitcoin. I'm your host, Peter McCormack, and today I've got an interview with Willy Woo on whether trading is detrimental to the price of Bitcoin. But before that, I have a message from my show sponsors. First up, we have crypto mining tools, and with the halving now done, I want to welcome back Scott Offer to the show. We know that the halving can have a big impact on mining profitability, and Scott from Crypto Mining Tools has a solution for Bitcoin mining equipment owners looking to get a little bit more out of their miners. I've told you about Scott's Bitcoin mining calculator in the past. Well, Scott has recently launched a Bitcoin mining hosting directory. If you need to move your Bitcoin miners to a more cost-effective location due to the halving, go to cryptomining.tools to research hosting options available in your country or around the world. Scott is also looking to add more hosting and co-location providers to his hosting directory. So if you own a mining farm and have extra space that you would like to get filled, reach out to Scott's hosting partnership development guy, Shannon Squires. He is on Telegram at Squires, Squires, or use the contact form at cryptomining.tools. Also, have you checked out sportsbet.io yet? The best place for online gambling, and they accept Bitcoin. Yeah, I love anyone who accepts Bitcoin. I cannot wait for the football to get going again. We've seen some parts of the world that sports is coming back. Very exciting. I actually also watched my first esports event this weekend. I watched a motor racing event. Very interesting. Had a mix of motor racing people, and I think Sergio Aguero was on there as well. So it's kind of cool, kind of interesting to watch. Now, due to the break in most sports with coronavirus, there has been a massive growth in esports, and sportsbet.io now supports 11 markets, including eFIFA, eNBA, and eNHL. They also have their Bitcoin casino and my favorite, the poker rooms. So you definitely want to check that out. Head over to sportsbet.io, which is sportsbet.io. Also, I have another new sponsor this month. It's Least Authority. It's one for you techies out there, the builders who are creating the applications. Least Authority is a security consulting company pushing the limits on how to build privacy-respecting solutions. They specialize in security audits, design specification, reviews, and security by design, while also making regular contributions to the open source and decentralized space. They can help you improve the security of your wallet application, key management solution, layer 2 protocol, P2P network design, use of cryptography, and much, much more. If you would like to boost your security strategy, well, you can arrange a no-obligation call to find out how Least Authority can help your next project. Just head over to their website and hit schedule a call. That is leastauthority.com, which is leastauthority.com. Okay, so onto the show today, and I have Bitcoin trader and on-chain analyst Willy Woo finally on the show. I met him out in Vegas, and we said for a while he needs to come on. Now, it has been quite some time since I've had a trader on What Bitcoin Did, partly because I always tend to recommend people stay away from trading. It is a very easy way to lose your Bitcoin, especially for newcomers who don't know what they're doing. Bitcoin moves fast in both directions, and if you are caught in the wrong side of a trade, you can easily see your account balance wiped out, especially if you are using leverage. But Willy recently put out a very interesting tweet claiming that after the halving, miners would no longer be applying the most sell pressure to the markets, and it would be the exchanges. Now, not everyone agrees with him, but I had some questions, so I asked him to come on. Now, every time you buy or sell on an exchange, there is a small fee that you have to pay, and this fee is for facilitating the trade and how the exchanges make money. Now, not all of them convert to fiat, but most of them convert back to fiat to run their business. And with the growing popularity of high leverage futures exchanges offering degen traders up to 100x, these fees are adding to the sell pressure, and Willy thinks this is affecting the market. So this is super interesting. Glad to get Willy on. If you've got any thoughts about this, you want to speak to me, if you want to challenge what Willy has to say, you can reach out to me. It is hello@whatbitcoindid.com. Outside of that, have a great week, and I will catch up with you soon. Evening, Willie. How are you?
Hey, Peter. Really good. It's nice over here in New Zealand at night. A few days from the halving.
I've never got over to that part of the world. I want to. I really want to. I got to do it at some point. Listen, look, I've been meaning to get a trader on the show for a while, but I haven't for a couple of reasons. I've got my own PTSD from thinking I was a trader in 2017, making and then losing a lot of money. But also, like, my show's for beginners, and I kind of want to think trading is an advanced skill, and I've put it off for a while, but I think actually today will be a good to do a bit of a trading 101 for. We're going to have new people coming into the market. They're going to be tempted to go out there and start trading. So at least let's arm them with a little bit of knowledge. So listen, before we do that though, what the hell happened with the dump last night, man? I thought we're heading to the halving. We're like in and out of 10K. Perhaps we'll get to 12K by halving, and then boom, we crash. What's going on there?
Oh gosh, since the last few months, really, I haven't really looked very closely at the markets. When I say closely, I mean short time cycles. When you're trading, people can trade long time cycles. You put money in, you sit on it. Maybe you sit on it for a year. Maybe you sit on it for 10 years. That's a very slow kind of trade, which you might call an investment, but most people sell out, so therefore it is a trade. And then we can go right down into these kind of time cycles that degen Bitcoin traders trade, and you're even down to the 3-minute or 5-minute candle. And so I'm not really looking at the short term right now. I used to, but that is a thing that you look at minute by minute, hour by hour. And one thing I will say about what the market is right now is that Bitcoin's a very easy to manipulate market. So if you have, say, I think the figure would be around $30 to $50 million, and you can put that on a futures or a derivatives exchange as collateral, you can go, on BitMEX, you can go up to 100x, but realistically, you can go up to 10x. So suddenly, with $50 million, you're wielding $500 million of leverage power. And of course, you can start to push the price around with that. If buyers are buying and you've got $500 million of sell power, you can just put a top on it. And so what happens in the Bitcoin market now is that there's, probably a crowd of about 12 entities there with enough capability, ammo, I call it ammo, just how much buy and sell power you have to just start to squeeze people out of their positions. So if you were to look at the very short term price of Bitcoin, it is this just random walk of price, and it randomly walks in the direction in which it's going to take out the most traders. If everyone's going long, the price is going to go short, because those guys will be liquidated, and there's a payday for those guys that are pushing the price down. So trading in the very short term is a very strategic game between traders, and whoever's got the most ammo will win. It is like a gridiron match. Whoever's got the strongest linebackers, push that ball around, you get an advantage. So I can guarantee you what happened with that crash is exactly the same strategic movement. And when you're trading short term, you're looking at all the signs of what the market is doing, the little guys, and you're looking for clues what the big guys are about to do.
Right. Okay. That kind of makes sense. But can they actually impact the long-term trend, or is the long-term trend protected against this? Is this is about those who are leveraged, who you can stop out? Like, you can't stop me out because I just buy and I hold, right? And I keep my Bitcoin off. I keep it in a hardware wallet, so nobody can stop me out of a trade because I just buy and hold. Is this all based on who is in leverage positions, who've got some kind of like margin call or some kind of stop?
Yeah, okay, so that's a real good question. Like, I like to talk about like Bitcoin in terms of the fundamentals. I mean, that's my field. I look at the fundamentals, and so if you've got a long-term trend of more people in the world liking Bitcoin as an asset to hold, then you've got a long-term incoming demand. And my field is looking on the blockchain to gauge that, because you can pick, when you buy Bitcoin, you buy it and you put it into your wallet. So that is, you see that on the blockchain as a transaction that's moving into a wallet, and you can gauge an idea of the demand, right? So there's a sort of adoption curve of Bitcoin as the world wakes up to it, and it follows typically with new technology an S curve. And so this is sort of this organic dynamic that's happening between long-term investors coming in, and then the sell side, the organic supply side, is coming from miners introducing new coins that are being minted into the supply. So the interaction between people coming in to hold as an asset class and the supply side from miners gives us an organic price. And then inside this, you've got all of us gamblers who are traders thinking they can make a buck. And so, this is the game we were talking about earlier. And so you can kind of see there's like this price, an organic price chart, and then superimposed on top of that organic price chart is this sort of apeshit wild strategic game that's being played, and it's seesaws and zigzags. And so in the short term, yes, definitely it has huge impact on the price. But long term, if you filter out those zigzags, less so, but not absolutely not so. There will be an impact from that trading, which was, essentially what I tweeted, was it yesterday, which is that all of this trading activity that's happening generates trading fees. We've got a number of futures exchanges all generating $1 billion of volume per day. So I haven't checked the latest figures, but I think we're talking in the 10 billion plus amount of volume being traded on these short-term leverage accounts, exchanges, and they will generate a lot of fees. And so those fees are just a tax on the traders. The exchange earns those fees, and then what do? They sell it on the market. They sell it for USD, fiat money. So now you've got this other supply side that's being generated, unlike the miners who are burning electricity, creating new supply, diluting people, and then selling it into the markets. You've got also the exchanges, which are tax agents of the trading activity, taking that as revenue and then selling Bitcoins back on the market as another sell side pressure. So what you end up seeing is that although this zigzag is from trader games, you get this fundamental aspect that's being produced from this activity, and that's an additional sell pressure. There's mining sell pressure, and now there's exchange sell pressure from that activity, and that is a fundamental impact, and that will affect the returns you get as a hodler long term.
All right, well, let's dig into that. So you've talked about. So I was talking to Luke Martin about this the other day, because people were talking about the sell pressure from miners, and I was like, well, I think there's sell pressure from elsewhere. So there is sell pressure from miners. There's sell pressure from the exchanges. I guess there is even sell pressure from like traders and businesses who at some point need a bit of fiat, right? So even you as a trader, you're going to have to sell out some of your Bitcoin if you're trading Bitcoin, just to have your money to live on every month. So I guess there's sell pressure from a number of different places, but the primary sell pressure you're saying is from the exchanges and the miners.
This is key. This is really key, and it's very subtle, right? Like if I'm selling some of my profits to money, to USD to live on, you would think that's sell pressure. But if you were to really dissect this and just take it down to the fundamental, okay, say I need $1,000 to spend for the next week to pay rent. Okay, I'll sell $1,000 of Bitcoin, but I'm selling it to someone who's buying it. So whenever you say I'm selling something, it's not true. It's an absolute myth. It's what view are you taking? If you take the systemic view from outside of I'm not Willy Woo, and I'm not the buyer. If I'm looking at the market, I'm going, oh, there's buyer and Willy Woo. Willy Woo selling and the buyer's buying. So that's matched. So it's a very neutral impact there.
So how's that different for the exchanges? Because
the exchange is like, Peter's going long, Willy's going short. I don't care which way the price goes. I know that between the two executing that trade, they take a fee, whether it's like 0.025%, point whatever, but they do take that fee, and they take it out of your pocket and they take it out of my pocket, right? And then they're going to sell that onto the market, right? So you get this, you've all heard of the guy that got liquidated out of Bitcoin. And someone else took that trade, but then this guy then goes away and is never going to look at Bitcoin again. The winner of that trade is really happy, but then there's the untold story of BitMEX going, I took a fee out of that, and then that fee is then sold onto the open markets. That's very similar to mining, where there's a tax on the system, and then the buyers have to absorb that tax. Is then taken out of the system and then sold back into the system, and a new buyer has to come in to take that up. There's a hidden tax from inflation. There's a hidden tax from the fees from the exchanges. And
so the market has to absorb that.
Yeah, it's a non-neutral setup there. And as of this halvening, that it becomes the most predominant impact to the supply side of Bitcoin.
Okay, so this halving will see the new coin issuance halve to 900 Bitcoin a day, and you estimate there's a 1,200. Is it 1,200 a day Bitcoin from the exchanges being sold off?
Yeah, that's the figure I got from a leading OTC desk. Obviously, they're the ones involved in working with the exchanges to turn it into fiat. So that's their estimate. And so maybe some of the exchanges are hodling, and they believe in it. I think CZ tweeted that they only sell off enough to pay expenses, and they're in for the long game and holding a lot of Bitcoins. So that's good news, but that means that they could actually dump more if they were not believers in Bitcoin.
I think Kraken does that as well. Kraken pays some of their staff in Bitcoin.
Yeah, that's really good to see. Actually, if you're paying your staff in Bitcoin, you're not selling to fiat. That's a true believer in Bitcoin. So it's good to see companies like that. BitMEX, no. Arthur Hayes has been on record to say we sell everything to fiat, and BitMEX is the 800-pound gorilla in the space. They produce the most volume by far.
Right. Well, we'll come back to BitMEX because I've got so many questions about those. Okay, so you've identified after the halving, the exchanges will have the majority of the sell pressure. But what does it actually mean? It's not actually changing anything. It's not increasing the overall sell pressure, right? It's just they will have a higher percentage of it.
Yeah. Okay. So, like, you can think of this this tax on the trading activity as like mining. Like, in terms of it doesn't impact the supply. We're always going to have 21 million Bitcoins, but the effect of the price of Bitcoin is very, very strong. Because we use, like, if you were to think of what happens at a halvening, the halvening means that the sell pressure halves. Instead of 1,800 Bitcoins per day that are being, on average, going to be sold onto the market, now it'll go to 900. Obviously, there's like half the amount of coins being sold for the same amount of demand. The price is going to rise. Now you've got this mining industry that is selling 1,200 Bitcoins per day, which no one's that I've seen publicly talk about this. And this 1,200 Bitcoin per day is this hidden thing that has been rising since the advent of highly leveraged futures trading accounts like BitMEX, which really, their volume only started in 2017. So if you look at the halving in 2016, the volumes from what exchanges we had there were spot exchanges, people actually buying Bitcoin to hold. You know, when I buy Bitcoin to hold, I buy the Bitcoin and then I might not buy again for another month or two or another 4 years. When I'm in a leverage trading situation, I will buy 1 minute, I will sell the next minute. Like I was saying in that tweet, if you had like $500,000 in a trading account, you can generate $400 million of volume if you're trading short cycles. If that was a spot trade in what, like back in 2016, the kind of trades we did then, $500,000 or $500,000 of asset I was going to buy to hold long term. Now that's turned into $400 million of volume. And can you imagine the fees increase on that is exponentially higher. So while we're having a halving of sell pressure from the mining reducing, we're having a hockey stick that's been produced by the new derivative exchanges, and so it's creating a very untalked about sell pressure, and you can actually see it on the chart since the 2017 time phase that we're very, very sideways now.
Right, okay, because I was going to say to you, surely this has always been the case. There's always been a sell pressure from exchanges.
Yeah, see, that's the thing, is the quantity is, yeah, okay, so 2016 there was a sell pressure. Sure, we had Kraken, we had like who were those exchanges? We had Coinbase. I don't think Gemini was really big back then, but we had a handful. We had Bitstamp, you know, people buying. We had like, let's call it 1x in volume. Now in 2018, 2019, 2020, that's not 1x now. I need to pull the numbers up, but I wouldn't be surprised if it's now a 10x in volume. Like, there are incredible amounts of volumes being generated on futures exchanges, and so we're getting a halving from mining, and we're getting a order of magnitude, a 10x from these futures exchanges. So we're moving into an era where the sell pressure is generated from this trading activity.
Right. Okay. So, I mean, it's something you have to be aware of. I'm not sure it's anything you can do about. But can you talk to me about these futures exchanges then? Because just bear in mind, I'm not a trader. I very early on bought and sold spot and made and lost a bit of money, but realized like this is a full-time job and you have to really know what you're doing. If not, you can get burned. So I just don't do it anymore, and I don't advise people to, especially if you know. I say just just buy your Bitcoin and hold long. I mean, my personal thesis is I'll have a consideration in a decade whether I'll sell. So that's my own personal kind of thesis. But in terms of understanding what futures are and how they work and the nuances, can you talk me through it and like explain it like I'm a beginner?
You know, futures is really just bets. You know, the original futures is like the farmer's they're gonna plant a crop, and you need to know that you need some sort of certainty in the market. And so I'd like to be able to sell my crop when I plant the seeds for this price, and then I can know a profit. So the futures exchanges are designed for that purpose, is that that farmer wants to sell their crop in the future, and then there's going to be another kind of risk taker, a trader that comes in to buy that risk. Sure, I'll buy that crop off you in the future, and then there's certainty given to the seller. And so that was how they originally were created. It's allowing this sort of hedge is to protect the farmer and then the other person buying the risk. And essentially that's what you get in an insurance market, right? You don't want your house to burn down. You want to pay a little bit of a premium to say, if this thing happens, then I need a payout. And obviously someone's going to buy that risk, and it's a very low risk, but that creates this market where people can sell off risk. And then what happens is, when you have this market where buying and selling of risk is created, it's, you know, the pure traders come in and say, I'm betting on this going up or down. And they're not actually producing the underlying asset. They just want to make a bet. And so this is the majority of the volume in the futures market, is that if the price is going down, if I think the price is going down, I'm going to make a bet on it going down, and someone else can make another bet on it going up. So ultimately, the majority of the volume on these futures exchanges are a bunch of traders making bets around the future. And so you get into the situation where you can sell more than 21 million Bitcoins theoretically on a futures exchange, because it's just a bet. And so this sort of, we call this derivatives. There's no underlying, you're not actually buying and selling Bitcoin, you're selling a bet around Bitcoin. And so the volumes are a lot higher. The leverage that you can do is a lot higher being offered by these products. I think it's a real financialization of Bitcoin. I don't think it's healthy for the long-term growth of Bitcoin. I think that Bitcoin's far too early for these kinds of products. I think that.
So let me understand how they work. If I want to make a bet, I just deposit my Bitcoin, go and make my bet, and then I'm settled in Bitcoin. But there's no actual relation to the underlying asset. It is just a bet.
Yeah,
there's no Bitcoin generated from it.
That's right. So you might say, I'll send one Bitcoin to BitMEX, and so now that's sitting in. Let's go to the simple case of where you're going to something like Kraken. I'm going to send one Bitcoin to Kraken, and I'm going to sell it. So I'll sell that Bitcoin, and I'll get US dollars for it. But in the case of a trading account, a collateral trading account, like, I would put one Bitcoin to BitMEX, and that sits in my account as collateral. And then when I sell one Bitcoin, I'm not actually selling the Bitcoin that I put in my collateral account. That's just sitting there as collateral. And what you're doing is making a bet that's going to go down. If it does go down, you make some profit. If it goes up, you lose, right? And as the amount that you lose get deducted off your collateral until it goes to zero, and then you're out of the game. And so that's how it works. You're not actually selling the underlying asset. You're making bets, and your collateral gets hit from whether you're winning or losing.
Right. Okay. So the problem here is also therefore an increase in leverage, because if there's an increase in leverage, there's an increase in fees as well, and it's the accumulation of fees which need to be sold back into the market by the exchanges. That's where you're seeing the problem. So this is creating the additional sell pressure.
Exactly.
Right.
Exactly. Back in the Kraken day, right? I'll sell one Bitcoin. Okay. Suddenly now I'm getting greedy. I can sell 100 Bitcoins for my one Bitcoin of collateral. And then suddenly I've generated that scale more fees for the exchange.
Would I be right in thinking this becomes a bigger problem in a bearish market because the market's falling anyway? So there's additional sell pressure when we're bearish already, whereas in a bull market, it hides it a little bit more?
Well, if the BitMEX policy is to be neutral about it and not hold Bitcoins, that they always want to sell off to US dollars to pay their staff and go into the founder's fund or whatever, then whether the price goes up or down, there's always this constant sell pressure. So if we're in a bull market, sure, the price is going up, but they're selling into it. They're going to be the ones that are going to be providing new supply, which buyers would probably want. In a bear market, they're still going to be the guys dumping new supply down into the market.
Why does everyone love BitMEX, man? Tell me the thing. I've always resisted, even in my early days when I did have a little trade, I always resisted signing up for BitMEX. Why do people love it so much?
I think it's just the liquidity. They're facing strong competition now. I'm with you. I was like, why do people love it so much? I mean, if you're trading very, very large volumes, say you're trading, my guess is around, I think you start to need to use BitMEX when you're trading position sizes of 5 million, maybe 10 million or more, then BitMEX is your only real option. At those position size, you may want to diversify across exchanges, but most of the other futures exchanges, to some degree, they source their liquidity from BitMEX. You know, essentially, if you're on another exchange, they'll arbitrage across and dip into the BitMEX liquidity pool and pull some of that liquidity out to present the trade to you on this other exchange. So most of the large traders will go to BitMEX because that's where the source of the liquidity is.
Right.
And so yeah, but BitMEX has issues around its order matching engine. It tends to lock up when the price starts to run, and that's wrecked many people.
Yeah, so I want to ask about that because it's a bit similar to the Coinbase thing. Whenever there's a market crash, suddenly you can't log into Coinbase. There seems to be a thing where like exchanges seem to have issues when the market moves quickly, but they've had years to prepare for this, like technically. So like, am I right to be mildly suspicious that they have a personal interest in locking up?
I'm with you, right? I'm with you. I think that there's absolutely no excuse for BitMEX to have a crappy order matching engine. You know, I hear Arthur Hayes talk about the complexity of that order matching engine, you know, like, and why it slows down. And on face value, you go, well, yeah, okay, it's very complex and so forth. But like, you know, I've never been involved in that deep engineering side of things, but I do know the founder of Level Exchange, and you know, before coming in to build that exchange, he worked on sort of like, I think visual graphics processing, and he said, look, this stuff, the volume of data you have to sort of calculate over is minuscule on these exchanges. And he said, I asked him the question, what happens when the volume on this exchange, his exchange, starts to ramp up? And he says, I am relishing the day where I can cut silicon, because it's a sequential process. You know, most processes you can throw more workers on it and like run it in parallel, but order matching is sequential. And what you do is you put it onto silicon. You know, you cut it like we put Bitcoin mining onto silicon. It's no longer running in software, it's running on ASIC hardware. So the thing to note here is this is BitMEX, who make billions of dollars in profit, and they have not cut silicon, and they have this excuse that it's a very complex calculation. We do complex calculations all the time on silicon.
But what's the benefit? Like, what for somebody who doesn't understand it, what's the benefit to them having their order matching engine break down during fast moves in the market? Because they are also missing out on people trading.
I don't think people jump off it. I don't know if I think they use the liquidity to attract it. They liquidate. It's a real good question. Like, you know,
is it like people can't get in and change their positions? You just can't log in and react?
I just don't know, you know, like I tend to jump to nefarious causes around this because I don't understand why wouldn't you make this thing work for traders? Because then if you're neutral to it, you're making your money off the fees. Why would you care? You just want this exchange to work well so that you don't undermine the trust of your traders. So I don't know, and I've not seen BitMEX give a statement that I can believe anyway around this.
But are they neutral? Because don't the exchanges themselves trade against their own customers?
Well, that's the billion-dollar question. You know, like it seems to me that it's the perfect setup to trade against your customers if you're in an unregulated.
You know the order book.
Yeah, you know the order book, and it's very different from the era. I don't know if the listeners here remember the Mt. Gox era, where 1/8 of all Bitcoins were stolen effectively. And, you know, we had this thing called Willy Bot back in that era. I didn't create it, but like, you know, it was like every 10 minutes there was this algorithm called Willy Bot that would buy $50,000 of Bitcoin, you know, and remember Bitcoin was worth near the start of that, $200 or even less, and that ran up to 1,200. So a very small market cap. $50,000 was a lot, and what that meant was, like, if Mt. Gox had this engine to push the price up, they were buying Bitcoins with fake money. They didn't have the US dollars to back it. And so you get into this bit where, a bit like banks, they don't have the asset to back the money. If everyone withdrew it, you can do a run on the bank because they don't have all of the money. And but in a futures exchange, you don't have to have the money. All you're doing is facilitating bets going long or short. This guy's thinking the price goes up. This guy thinks the price goes down. They make a bet. If you're the exchange, it's perfect. You can go, oh, everyone's going long. Well, let me throw an algorithm here that keeps selling. It keeps selling and making, the opposite side of the bet to push it down. And you're always backed because it's not the same setup. So it strikes me, in an unregulated environment, it's the perfect environment to trade against your customers. And we're in the era of unregulated futures exchanges.
Yeah, because I would look at, like, last night and say, and in my little simple world, I'd say, okay, we've got a halving coming. Everything's looking quite bullish. It looks like we're going, like, in the next few days. Like everyone talks about the halving as a very bullish event itself. I mean, I'm still not convinced. I think it's a bullish event over the space of the next, like, 18 months, 2 years. I don't think the day itself is, but a lot of people feel that it is. A lot of people feel that it is a bullish event. The price has gradually been growing. I can imagine there's a lot of people now long going into the halving, and perhaps long with leverage. So I can see there's an incentive for somebody to go, okay, great. Well, let's market sell a huge amount of Bitcoin and let's bring the price down and then wipe out a number of... And you see the whale calls come into Twitter all of a sudden. All these leveraged positions suddenly getting stopped out. So I can see there's an incentive for someone to do this. I just don't know who it is.
Yeah. I mean, I have walked into the headquarters of a futures exchange and talked to the founder. I'm like going, who do you think this player is? There's some players here that are pushing this price around. And he's like, we want to know too. But, like, no one's going to talk about it.
Right.
All I know is there's a lot of dirty stuff going on in the markets. Whether it's a third party whale that's wanting to move the price around for maximum strategic gain, which is kind of fair. That's a fair way of making money. Or if it's the exchanges. If it's exchanges, that's a very, very dirty way. Yet we do not. I've yet to see anyone break a story of really, the exchanges trading against us. But I know that a very significant amount of advanced traders do believe that the exchanges are trading against us.
But unregulated, offshore, how can you prove it? How can you check it?
That's right.
Next up, I talked to Willy more about trading, but before that, I do have a message from my amazing sponsors. So first up, let's talk about the mighty Kraken. They put the power in your hands to buy, sell, and trade Bitcoin, and I've definitely seen a growing interest in Bitcoin recently. My beginner's guide shows are doing really well, and I have had a few friends get in touch saying to me, Peter, is now a good time to invest in Bitcoin. So, if you are interested, if you are new to Bitcoin, there is no better place to buy than with Kraken. At Kraken.com, it could not be easier to sign up and start accumulating Bitcoin. They also have a beautiful mobile-first app, so you can buy Bitcoin on the go. With their world-class security, they are the most trusted cryptocurrency exchange on the market, and with their 24/7, 365 customer support, they will help you out with any issues, whoever you are and wherever you are. There is no better place to buy Bitcoin. Find out more at Kraken.com or download the app, which is available for the iPhone and Android. Just search for Kraken Pro, which is KrakenPro. Next up, we have the future of Bitcoin and financial services. We have BlockFi. And they've just announced the launch of their mobile app. Have you checked it out yet? I've got it on my phone. It's pretty amazing. They've packed so much into it. They have a very quick and easy way to sign up. You can open a BlockFi interest account and earn money on your Bitcoin. Using Bitcoin as collateral, you can also take out a USD loan. The app also enables funds to be transferred directly from a crypto wallet into a BlockFi account. They've got market expertise, sophisticated security, and so much more is coming soon. So you definitely want to check out the BlockFi app. I always say with BlockFi, do your own research and then head over to blockfi.com, which is blockfi.com, or search the Apple and Android app stores. Just search for BlockFi, which is blockfi. Well, listen, look, as I said, I don't cover trading a lot because I don't trade myself, and I do recommend new people coming in just don't trade. I recommend just have a buy-in strategy and a holding strategy and go simple.
Well,
but
before we move on to that, I would say, like, when I get asked by friends, like, shall I trade? Everyone thinks that, trading is a great way to make money. I have this thing I say is that, like, what you want to do is put a tiny amount of money in, and then your goal is to learn the maximum amount of lessons for the amount of money you lose, because you will lose it. Because, like, in most markets, 90% of traders lose, 10% win. In the Bitcoin market, 99% of traders lose, 1% win. And the reason why you want to learn these lessons is the entire world works on markets. And so whether you're, like, going to buy your next house, be able to read a chart of where the housing market is, whether you're going on overseas holiday and want to know when the best time is to buy the Forex into the new place you're going to spend your money, those are useful skills. So learn those lessons. Don't think of trading as anything more than a way to lose money. Think of it as a way to learn a lesson on how the world works.
Well, that's fair.
But
I was I don't know if you you follow my show at all, but I did this beginner's guide, 17 episodes covering everything to do with Bitcoin that you could possibly learn, although I didn't put trading in there. And I've just turned it into a 1 hour episode. I've been through the 20 hours of content. It's like, what are all the best bits I can get this into 1 hour for somebody? But the thing I said about trading in there is I was like, look, most people lose money. And if you aren't, and like I said, even seasoned traders who've got experience of multiple different markets, they lose money. What is so special about you that you think you can come in and suddenly outsmart the market? And I've heard this 90 to 10 rule. I didn't realize what you 99% of people are losing.
Yeah, that was a publicly stated number by Arthur Hayes on BitMEX. 99% of participants lose.
So what? So do you think there's a churn, or do you just think there's degen gamblers coming back over and over again?
I think that
throwing themselves to the sharks.
I think it's just exactly what I've been talking about, is in an unregulated environment and in the very immature, thinly traded asset like Bitcoin, that it takes just a few guys with all the ammo in the world just to move it anywhere they want to take out the most traders. So it's a lethal combination. like in the regulated markets, you've got highways, right? You got highways and cars traveling here and there. In the Bitcoin market, you've got a big, huge, 20-ton truck and tiny little minis driving around. And that truck's going to take everyone out. It's outsized. It's very outsized.
What do you think would be more important, regulation or more liquidity?
Yeah, it's an interesting one. I actually think that we need regulation in this space. I think that that's more important. We've got liquidity for Africa in Bitcoin, in terms of the futures exchanges. Yeah, okay. What do you mean liquidity in terms of the spot markets? We suddenly those spot markets are being traded. I think what's needed is that the spot markets have a higher proportion of the liquidity versus the liquidity exhibited on the futures exchanges. The investors are exhibiting more volume than the degen traders who are making bets around it. Right now, it's all degen traders, all of liquidity's there, and so it's I'm going to make a $1 bet here, and with 10 cents, I'm going to push this little pipsqueak thing that's happening on Kraken around so I win that bet on the other side. So yeah, bring balance to the force, bring balance to the spot exchanges.
Yeah, because that's what I'm thinking. Because you're saying if with $50 million, I think is what you said, you can move the market around, right? With a lot more liquidity and a lot more volume, you're going to need more than that. And so I would have thought more liquidity will make it safer for like the little guy.
Yeah, so we're talking about liquidity in terms of you've got these two parts of the ecosystem, and on the futures exchanges there is incredible amounts of liquidity. I can, even on a second tier futures exchange, I could sell easily $2 million of Bitcoin in a number of seconds and not have that impact the price more than a few cents. And then if I did that on Kraken, man, would that price move. You would notice that happening on a spot exchange. And so there you can get this situation where you can start to move the spot exchanges around to kind of make sure, guarantee your bet is going in the right way. And so if the spot exchanges had a much larger liquidity base, when I start to buy my $2 million of Bitcoin on Kraken, for example, it doesn't move much. Then that creates a much more stable market, and it's less prone by these futures traders to start to manipulate the market. Essentially, if you're a trader, if you're a very large trader, your goal is to manipulate the market. You take risks in doing it. Someone could take the other side of the bet. But at this size of the game, you want to flex your muscle at the right time to guarantee your bet as much as possible and hope that there's not another big gangster coming in to push you the other way. So yeah, the regulations, if that came in, that would start to bring balance into this market. The futures would no way allow 100x or even more leverage. That's just degenerate. Which leads to this imbalance, and then for sure they would be audited so tight that we know for a start that there's nothing hanky-panky going on behind the scenes.
Right, okay. Well, let's do some of this trading 101 stuff. So someone new coming in, they're like, all right, I get this Bitcoin stuff, I've bought a little, but I want to be a little bit greedy, I want to go out and trade. I think I can trade and make a bit more. So I just want to cover some of the basics. But really, who is there anyone out there that shouldn't be trading? Anyone you think you really should just stay away from this?
I think that's probably the majority of us, to be honest. I don't think many of us should be trading. I don't know if it adds much value to Bitcoin. Obviously, let's qualify this. When I call trading, it's like we put some collateral in, and then it's a casino. We're betting against other people, and that's like the derivatives market. BitMEX is interesting, is that it's a spot exchange, but they have a margin trade, and that's also in the class of making bets. But then when you talk about exchanges like Coinbase, Kraken, Gemini, and so forth, these are a different kettle of fish. Obviously, you need these types of what we call spot exchanges to allow investors to sell out of the asset and new investors to come in. And I don't consider that trading. You're not making a short-term bet. You're actually buying the underlying or selling the underlying. So I think very, very few people should be trading on the derivatives exchanges, making bets. If you're thinking about the spot exchanges, then sure, you need it to get in and out of the asset class. Like, I was listening to Ray Dalio. He did a really good interview with TED in TED Talks recently, and he mentioned, everyone thinks that they're going to make money trading. They're going to beat the markets, and he was saying, I can tell you that beating the markets is harder than winning a gold medal in the Olympics. And he doesn't really meet many people out there in the public that thinks that they can they get the gold medal in the Olympics. Everyone thinks that they'll beat the market. And so, I don't think many people should be trading outside of the education side of the game.
Well, that's why my trading strategy is buy 10-year hold. I think I can win that way. I think with a 10-year hold on Bitcoin, I can win.
And if more of us do that, Bitcoin will prosper more easily. It's this trading that's holding Bitcoin back, to be frank.
Why? Because people are just throwing money away and creating sell pressure.
Yep. That's the fees going to the exchanges, producing sell pressure, and that is hockey sticking. That is going up by orders of magnitude. While we all celebrate this mining, this mining's going to reduce the sell pressure and the price is going to go up, and it's halving. And meanwhile, the exchange volumes are 10xing and taking the new, they're taking over from the miners by producing that at exponential rate.
All right, so listen, look, some people are going to ignore you anyway, Willie. They're going to be like, yeah, but I am that 1%. So if somebody does want to go and trade, if they want to go and dive in, like, how does somebody learn to trade? Like, what are the places you would point them in the direction of? You can't just sign up to an exchange and start throwing money around, right? You've got to at least go and learn some basics, some fundamentals.
Like I was self-taught in trading, and that's the very interesting thing about Bitcoin is that it allows you to trade very, very tiny amounts. And I traded in Poloniex, which was, quite big back.
Trollbox.
20, yeah, I remember the Trollbox. 2013, 2014. 2014 was where it started to really ramp up. And so, I would say, like you go to Poloniex, and this is like, you just look down the list, and there's like all these altcoins, all these shit coins, and like you just like there's the big leagues, which is Bitcoin to did we even have? I think it was all trade against Bitcoin. So big league was Ethereum to Bitcoin. That was very high stakes because there was a lot of volume. The big traders have a lot of money. They're going to play on the high stakes table, and you just keep going down that list, and you pick the table that is low stakes where the beginners at. And then you can learn to gamble because that's essentially what you're doing. And like poker, there's skill involved, and there's nothing like the experience of reading what the players like. When you start to watch the order books and the charts, you start to read what people are trying to do, trying to scare you into one position and so forth. So there's that side of very organic learning. It's a visceral sort of experience, and that's how I started. But then there's also the technical aspect of figuring out, based on drawing lines on a chart, whether things are going to break out or not. And there's a lot of good YouTube videos. I would probably go into YouTube and look at some channels. Like, Tone Vase does a very popular channel. He uses a particular system, but there's many, and there's a lot of online courses and groups that you can join to learn about trading. And that's what I'd say. There's a few groups out there that you can join. I won't name any of them, but like you have that community factor where you learn together. I never learned that way, but I can see the value in that.
Right. Okay. So there's two sides. There's learning the technical, and then there's a kind of out there getting the feel. Like if you're a footballer, you got to kick a footballer around to get a feel for the football. And
yeah,
same with this. You got to go out there and make a few bets and just get the feel for how the market moves. And
yeah,
I get that. What about rookie mistakes? What are the stupid things that rookies do that they need to avoid doing?
Oh gosh, where do you start? Like, I mean, the very basic one is risk management. You want to make sure that you have a plan if you're wrong. So generally, the most important thing is making sure that if the trade goes against you, you stop out. So you limit and contain your losses. But even more basic to that is that I think the very basic human nature is that if I'm down, if I say you're down, most people will want to increase the trade because they want to make their money back, and that's actually the time you want to reduce your trade because you made a wrong decision and you want to cool off because you're getting more emotional. So there's a big emotional part of trading. That's the bit that most people get really screwed on, is that they get too emotional. All the good traders are very, very zen or unemotional. It's almost a practice. So that's a big mistake, getting emotional.
We have that in poker, Willie. Like, I don't know if you play poker, but like we say, if you're going on tilt, chasing your losses.
Yeah.
Yeah, so it's quite an emotional thing in poker, especially because one of the things about poker, I guess there's some similar things in trading, right? Like in poker, it is part skill, part luck, right? The skillful player over a long enough games will come out on top because they're playing a little bit of math. And I guess trading's the same. I guess trading is part skill, part luck, right? You can read the market, you can make sensible trades, but at the same time, the market can turn at you. For example, specific news that you might not expect comes out. Maybe Bitcoin gets banned in a country or something, and that affects the market. So I guess that there's a bit of that as well. But we have people in poker who go on tilt who have a bad loss and they start chasing and start making stupid decisions before, when they would, like, I don't know, they might only play like a 6-7 suited, they might play a 6-7 offsuit and then chase like a low pair and start losing more money. I guess that's a very similar scenario.
Yeah, it's very similar. Like, it's very interesting to see that majority of Bitcoin traders are big poker fans. Like whenever we do these Tone Vays conferences, he's always throwing in a poker game. It just always surprises me. It's a trading. It's in Bitcoin meets traders, but it always surprises me how many of them are poker players. Same skill set.
All right, man. Are there any kind of like things specific that you like to look at, like indicators or things? I know you like your on-chain fundamentals. Talk about some of the stuff you like in terms of trading.
Yeah. Okay. So, having talked all about trading, I almost feel like a pretender here because I am not an expert trader. I'm a profitable trader, but I only trade to test some of the signals that I work on, right? And so my field is really this, what we call fundamental analysis, is what's really going on in the market over the long term, what we call the macro cycle. And so with Bitcoin, it's a very new kind of animal that we've seen. That, like, if you are investing in, say, Amazon stock or Google stock, Apple stock, it's not like you get to see how the management is running, or any event inside the company, because that's behind closed doors. But in the blockchain world, you can see everything happening. I can see when buyers are coming in and holding their asset, moving them between wallets. I can see when old holders who have had their coins in their wallets for 6 or 7 years come out of the woodwork and start to sell that onto market. And that gives you, very detailed ideas of, or signals of what's happening in the whole network. Obviously, for example, if we say the market is buying right now, what do you actually mean? Because if someone's buying, who's selling? There's always a seller. What we actually mean is, who is the smarter person that's buying? And so, if you're looking at a wallet and suddenly, what's this? There's like all these Bitcoins coming out of these old wallets en masse now. And they've been in the wallets for like 4 years or more. These are people that held their coins from the last sort of cycle of bull bear, and they're experienced and they're starting to sell. And you can go, well, they're most likely more smart than the new guys buying. So you can start to look at these behaviors inside the blockchain by peering into it and kind of reading where we are. And it turns out that these bull bear cycles that we have in all markets, in Bitcoin, you can actually see the underlying activity on the blockchain repeat itself. Like as the market starts to get hyper and the lemmings are coming in to buy at that mania phase of the market, you can see these old whales that have held their coins for 4 years or more start to sell, and they're starting to move. And you go, oh, okay, that's a signal that we're starting to reach a top. And so, yeah, this is this new field called on-chain analysis that really started when I started posting some of this research back in, I think, late 2016. And now it's become a very large field with specialist companies like Coinmetrics providing that data to hedge funds and so forth.
All right, awesome, man. All right, cool. Well, listen, I think this is going to be a a little introduction. I do hope most people actually don't go and trade. It's still going to be my advice to people. It's like, just don't go and trade. All right, Willy, listen, appreciate you coming on. It's about time we finally did it. It was cool to hang out with you in Vegas as well and finally meet you. And good to do a bit of trading introduction. I'm still going to recommend to most people, look, don't do it. Look at the numbers. Just be sensible. But
yeah, I feel like starting a movement against trading right now. I've only just realized how damaging it is. Put numbers.
But we need
it.
Surely we need a little bit of trading because we need price. We need price discovery.
Yeah, that happens on Kraken, not on BitMEX.
Right. So you want to be...
BitMEX is responsible for the zigzags and the volatility. Volatility kills new people coming in, scares them away. People get wrecked. They get turned away. You have the sell pressure from the exchanges. If we killed BitMEX, the price would be a lot higher right now.
Right. Okay. So you're like, you don't want to kill trading. You want to kill degen trading.
Yeah, I don't want to kill the act of buyers coming in, buying and selling the underlying asset. And then you get the traders around Kraken that actually add liquidity. You need people to take the other side of the trade of the underlying. But when you get to derivatives trading, shitty. Like, we're just making bets, and then all of the activity just get dumped. All the fees get dumped onto the market. And I'm a believer that we need to get to 1 trillion and then 10 trillion, right? Otherwise, Bitcoin doesn't make a dent in the world, and BitMEX, etc., is just slowing that down.
Well, I'm with you on that, brother. I want it to 1 trillion, then I want it to 10 trillion. Hopefully it'll happen. Yeah. But listen, I appreciate you coming on, man. Listen, if people want to follow you, especially if they want to go and read some of your Medium posts, where can they find you?
Okay, so I'm on Twitter as Woonomic, and if you want to read some of my blog articles, not very active these days, but you can find me on woobull.com. Obviously, I'm bullish on Bitcoin. So go to that site, and I also have a lot of charts, charts.woobull.com, linked from that site, which a lot of the on-chain research I do, looking at the Macrocycle.
All right, nice one, man. Well, listen, appreciate this. Stay safe and healthy out there. Maybe I will see you back in Vegas next year, or maybe we'll never travel again. Who knows, man? But stay safe, yeah?
I hope not, but yeah, okay. Look forward to having drinks with you next time.
All right, brother. Take care. Bye.
See ya.
Okay, what did you think of that? Are you a trader? Are you ruining your chance of getting a Lambo? Are you a degen? Are you doing 100x? Okay, seriously, let's get into this subject. Now, I am not a trader. I don't do it anymore. That's how I started out. I thought I was a genius. Really, I just hit a bull market. And then when it came crashing back, I had no idea what I was doing and lost most of my gains. So I kind of recommend that people avoid trading unless they really know what they're doing, because I don't want to see people get wrecked. I think there are better ways to accumulate Bitcoin. Now, Willy said that 99% of traders in Bitcoin lose. And I mean, I don't know if that's true. I could believe it. But if that is the case, there's a lot of people throwing Bitcoin away. Not something I like to see. Now, I think it's very interesting that Bitcoin exchanges are becoming the biggest sell pressure, but I'm not sure if this is something that we need to be concerned about, or it's something that is proportional to trading. And I'm not really sure fully on the implications of this. It was definitely interesting to talk to Willy about it, but I imagine there's somebody on the other side who has some counterpoints. So if you do reach out to me. My email address is hello@whatbitcoindid.com. Outside of that, I hope you have a great week. Loads and loads going on here. I've got a few documentaries I'm working on. Can't wait to get them out. Anyway, take care. And like I said, if you want to reach out to me, it's hello@whatbitcoindid.com.